So I thought that we'd do this tonight. I had a lot of traffic on Twitter this weekend because of this, the whole thing with silver and yeah, hold on, Pedro, I'll do it. The whole thing with silver and I retweeted it, Peter. Anyway, let me get the chat up so I can see. If you guys have a question or you have a comment, just let me know. Anyway, I wanted to do this tonight because I've had a lot. We've had a lot of. I've had a lot of traffic on my Twitter since I commented on GameStop and then Ira Harris and I had a long conversation last night. Both in email form, and then I finally got Ira to move into the 21st century and start texting. we had a 24 email chain going. So anyway, in that conversation last night, we had a great deal of discussion, and it ended up leading into our conversation last night ended up leading into Ira Harris and I conversation last night ended up leading into his blog post that he had just put out concerning silver, and he goes back to 1980 when the Hunt brothers tried to corner the silver market. He also gave us a really good here. Let me just pull it up and I can read from it real quick. He gave us a really good look on things that I thought is very important, and a lot of it is what we talked about. And I pulled it up. I put the gold silver spread up on my charts. I don't know if you guys can see them, and I don't know how to. Guys, please, and also I did this last minute. So next week, if we do, we will do these more often, and when we do, they'll be better planned out. Okay. I don't know how to share screens. I will learn how to share screens so I can show you guys what I'm looking at, and what this silver with the gold silver spread looks like, and also ratio, and also the platinum gold spread. So Ira's idea is that there is, if anybody is going to get caught short, if anybody's going to get caught short on the silver side, and the only ones that he thinks are going to be caught short silver are going to be the banks and some of the dealers and other commercials. Hedge funds, he thinks, him and Peter Bookvar both think are long. So if that's the case, then that's going to be interesting. I'm still short S&P from the yearly opening range on Friday. I'm interested to see where we're going to open. I don't, as I said Friday before we left, and many of you guys in our group are also short. Well, not many, but a few of you. And like I said before when we left Friday, we have already paid for the trade. We've already taken profit on it 2 or 3 times. Some of us have added and took profit on our add-ons. We closed, and this is the important part, in the S&P solidly below the yearly opening range of 3740 to 3748. And the NASDAQ closed slightly below its yearly opening range of 18,280 to 18,280 to 80 to 90 is that target zone. So we closed very solidly underneath both of those levels. That is not a bullish look in either of the equity markets, in the 2 main equity markets. So if you guys are here for some sort of a bright, smart macro conversation, you're in the wrong place, because that's not me. I leave that, as I tweet all the time, I leave that for Ira. I'll leave that for Anne-Marie Bond. You guys know Anne-Marie Trades, Anne-Marie Bond on Twitter. I'll leave that to smarter people than I. we had a great conversation with Anne Marie on Thursday that I might post on YouTube. If you guys don't know who Anne Marie Trades on Twitter is, please look her up. She is one of the best traders that I know, and also one of the wisest traders that I know. I had the extreme privilege of meeting her about a year and a half ago when I did one of Anthony Crudeli's TV shows, Trading Futures, and we hit it off immediately. And I mean, we hit it off immediately. So this conversation that we had with Anne Marie Friday, followed by an incredibly great conversation that we had with Ira Harris, the great Ira Harris, on Thursday afternoon. That day I was exhausted. You know, my brain doesn't normally work that hard, especially after a full day of trading or a full week of trading very volatile markets. What I'm good at is I'm good at managing risk. I'm good at managing my trades. There's two parts to every trade: managing your risk and managing your profit. Traders that are on that roller coaster, you know, losing money, making money, losing more money, they haven't learned how to manage the risk yet. When you start to learn how to break even, when you start breaking even, now you're starting to learn how to manage your risk. In order to start making money, that's when you start learning how to manage your profit. And it takes a long time. I never wanted to hear this, but my mentor, Anthony's mentor, Mickey Hoffman, when Mickey taught us, he taught 6,500 traders. He mentored 6,500 traders through the years. And Mickey taught every single one of us the same thing. If you break even your first year trading, congratulations. If you break, you're ahead of the game. Break even your first year, you're ahead of the game. If you break even your second year trading, congratulations, you might have a career. If you break even your third year trading, you do have a career. Then it's time to start learning how to take it to the next level. Both phases of my career, I did not have the luxury nor the time to give it a year. I had, you know, a newly married man, 1997, 1998, when I first started trading in the NASDAQ pit. I couldn't break even. I was bartending 6 nights a week. I was working so hard, I would put my underwear on backwards, go to work and go to the Pichadun and pee all over myself. It's only happened once, but it did happen. Anyway, I told you, if you guys are here to hear a big smart thing on GameStop and thing, I mean, I can talk that stuff with the best of them, but that's not where I'm most comfortable. I'm most comfortable in my mindset. I'm most comfortable in how we trade, and I'm most comfortable in making sure that I learn how to manage, that I continue to learn how to manage my risk and continue to learn how to manage my profit. Because, you know, that's how I'm going to feed my family. That's how I'm going to continue to provide for my family the way that they're used to me providing for them. So the conversations that we had with Ira and the conversation that we had with Anne Marie on Thursday was so very important, because I have to have a global macro context to be able to look at the markets from. But, you know, it's not just an anecdotal story. It's a study that the CME group did years ago that said that if most traders, 90% of traders, if they had the high and the low of the quarter, dare I say the high and the low of the year, most of us would still lose money. Having the high and the low of the year in advance, most of us would still lose money. So you can have all of this incredible, macro fundamental knowledge and information. You can have all of the best technical awareness and technical analysis in the world. But unless you learn how to manage yourself, manage your emotions, manage your thoughts, and unless you learn the two parts to every trade, how to manage your risk and how to manage your profit, it doesn't matter. And believe me, I know what I'm talking about. As many of you guys know, I was one of the biggest traders in the NASDAQ pit. Sometimes some would say one of the biggest traders in the world in there for a little bit of time. And you know what that got me after my divorce and subsequent business failures and investment in every restaurant and bar that anybody asked me to invest in was driving a truck again, driving Uber again, and moving in with my father. You know, my 2 older kids have trust funds, but my 3 younger ones for a while had to, shovel snow for Christmas money. All right, let's see where we're going to open. We got 30 seconds until the open. Again, guys, I apologize. We did this last minute, so I really don't know how to share my screens. Hopefully next week, the next time we do this, we should be able to do this, okay? Hey, Ola, I'm glad you're here. So let me see where we open first, because I am short spoos. And let's see, opening call, I think, in silver is much higher, I think. It looks like 29,805 is possible. All right, 2840, silver's up a shit ton. S&P 3990, NASDAQ is below the opening range. Okay, all right. Where the fuck is my silver chart? It's a pretty big gap up in silver. And it's going straight up. Damn. You guys remember it? Those of you guys who are in my group, you remember, nice job. All right, Hamilton, nice job. Where are you long silver from? Are you long, where are you long silver? Are you long here or are you long from last week? This is kind of what we do during the day too. 26,130. All right, and you've taken profit on it already? Have you paid for the trade and taken profit? All right, how many do you have on? Just, you don't have to tell me how many, but give me like a ratio. All right, my suggestion, the way that I trade is I trade in quarters. So what I would do is if you've got two on, I would sell one. Okay, now bring your stop up to 26,130 for a scratch, or actually, yeah, fuck it. Leave your stop in it for a scratch. You took profit for $2.50, $3, wherever the hell you did. Let the other one come down and scratch out, or sell it at $50. Who knows? Who knows where it's going? You know, that's what I love about this business. So, and one of the mistakes, this is why I tweeted about this week, about all of the traders that are trading all of this other stuff. You know, the GameStop, all of these kids, my son, who the pot smoking, snowboarding, you know, Vail living ski bum is so enthralled with this whole thing. He's so enthralled with what's going on with the markets and GameStop. What do you got, Stevie? All right. The one thing that I wanted to say about the equities. All right. You're good. 35.85, Steve, or 36.85, Steve. We got to get underneath 36.85. I haven't readjusted targets on the downside, but 36.85. Yeah. What do you mean I don't like? Sure, I like your face, Dirk. Anyway, Phil, you're still long silver. Good lad. And I know you took profit. What's up, Manny? How's things? How's everything, kid? You doing good? How are the babies? They're not babies anymore. Matt Cicero is talk about a real trader. There's a guy managing a lot of money, more money than what most of us can even imagine. Yet this is a guy who knows the ins and outs of the bond market right there, knows the ins and outs of all of the macro issues that we talk about. So, and he can talk about them so much more eloquently than I can, but still is constantly working on learning how to trade for himself, constantly working on learning how to trade his own accounts. So let me just say this real quick, okay? I trade in quarters. So I don't trade sometimes I trade 4 lots, but let's just say I sell a 4 lot at 36. Well, what's the opening price? All right, 36.92. Oh shit, we're underneath 36.85. Fuck, this is beautiful. Hold on just a second. I'm using target. 36.52, Stephen. Underneath 36.52, 36.25. Under 36.85, 36.52. Underneath 36.52, 36 quarter. Underneath 36 quarter, we're good, James. Good job, JU. Under 36 quarter, we're going much lower. S&P underneath 12,880, 12,800. We're open. We're through that. The NASDAQ rally's over. Russell still has another 60 points to even get to the early opening range. Now, I do not, guys, just to be clear, the traders, JU, trader from my group, and also Steve Filler, another trader from my group, short at 92, and JU is short NASDAQ, and Phil Ricciardi, long silver. I don't initiate trades on, and short NASDAQ and S&P apparently too. I don't initiate trades on, I don't trade at night. I don't. I've lost more money trading at night than I have at any other time period. But there are the rare occasions when we open at the yearly opening range, or when I have a position on already, an existing position, where I'm going to be in front of the screens and I'm going to be with our traders in the PAX group. I'm going to be with our traders every Sunday night when we open up in important areas. We opened up in the NASDAQ, we opened up in very important areas. In the S&P, we opened up in very important areas, and we're taking them out. What's gold doing? All right, gold isn't moving. It's silver. What's platinum doing? Shit, where the fuck is my platinum? All right, so as you can see, those of you guys who aren't familiar with the way that I trade, back to the quarters. So 36.92 is tonight's reopen. Sell a 4 lot at 36.92. Well, no, I don't want to go through that unless you guys want me to. Man, look at that. Platinum is actually lower. Oh, no, it's not. Oh, for God's sakes. Steady. What do you guys want? Is those of you from Twitter that just read my tweets and stuff, what do you want to hear from me? Nice job, Stephen. What do you guys want me to talk about? What do you guys want to hear from me? All right, so Dayton, let's talk about the opening range on Friday, okay? Friday's opening range was 37.58. The fuck? What was Friday? Yeah, 37.58 to 37.61. Okay, I use the definition of the opening range that we've used on the trading floor for, I don't know, 100 years. I was told years ago by people who would know that the opening range trade has been used and utilized since the opening range trade, as I continue to define it and use it, has been utilized and used by traders since Dow theory came aboard in what, 1913 or something. All right, so with that said, 37.58 was the bottom of the opening range. The high was 37.61 quarter. The high regular trading hours that day was made just inside of the opening, or just above the opening range at 62.5 or something, right? So that's neither here nor there. It's a bit of a bearish sign when we fail to get up to any of the targets. Dayton, I don't use charts during the day. I trade from pre-approved targets. I don't trade in targets that anybody in our group is going to tell you. You know, we have the high and the low pretty consistently in our plan almost all the time. And, you know, that's neither here nor there. Again, you can have the high and the low in any market, but if you don't know how to trade and if you don't know how to manage your risk and your profit, you're not going to make any money. So it doesn't matter. Anyway, the point that I'm trying to make here is I sell a 4 lot at under 58. Under 58, 37.58, I'm short. Above 37.61 quarter, I'm long. So I sell them at as close to 58 as I can. 57 quarter, 57 half, and there's a whole way that I do it and that I teach how to do it. The traders in our group that I teach how to do it. But I pay for my trade. I sell a 4 lot at 58 or a quarter, you know, and if I sell a 4 lot at 58, my pay line, what we call the pay line, is going to be 4 points from the bottom of the opening range and 4 points from the top. So we pay for our trade with 4 points in the S&P at 37.51. The next target in the S is going to be 36.52. 36.52, James. Underneath 36.52, 36.25. I'll have better and updated targets under for us after we get off here when I readjust the targets. Okay. All right. So sell a 4 lot at 57.75. We pay for the trade by buying a 1 lot at 54. Now we have our targets that we're looking for the market to do it. So again, I got all kinds of silly sayings like now, once we pay for our trade, it's easy like Sunday morning. So I put my feet up, I move my stop up to a scratch or just inside the opening range. So I cannot possibly lose money. So now I completely remove my risk. I have no risk. I've got risk to, profit, but I don't consider that risk. I consider risk to whatever my beginning balance of my statement said that morning. I don't want it to be below that. I don't lose money and I don't win money. Ooh, God, I can't stand those sayings. I don't win money. I don't lose money. I earn it. And I have to spend it. Like in any other business, I have to spend money to make money. So I keep my stops tight. I don't manage stops like most people do. I'm not going to sell 57.75s out of the opening range and put a stop on the other side. I'm going to put a stop just inside the opening range. Think of the opening range as a room. 58 to 61 quarter is a room. If the market is inside there, if the market is inside of the opening range, I don't want to have anything on. Thanks, Jack. Guten Tag. No, not Guten Tag. Guten Haben, right? Guten Haben. So if the market is between 58 and 61.75, I'm flat. If I sell 57.75s, I pay for my trade at 54, and now I raise my stop just inside the opening range for a break-even stop, or just inside, or for a scratch, so I cannot lose money. And then I let the market do the work. Like I was talking about today on Twitter, when I was on the floor, I was a market maker, and that's why so many of us had such difficult times moving off the floor, is because we controlled things then. Well, all right, so 100.5, 145. I can move the market. I can move the NASDAQ 100 points by myself in those days. Now, it would help when the other traders jumped on board too. And anyway, so sell 58s, 57.75s, pay for the trade at 54. Now I let the market do the work. I have nothing else to do but to put my bids in below the market at my targets. We opened up just above the yearly opening range, which is the biggest. It's always going to be the biggest area. It's always going to be like a magnet. Once we get underneath 37.48, I'm going to take profit there at 48. Once we get below 40, the bottom of the yearly opening range, 37.40, I'm going to sell what I either took off, or I'm going to add a whole nother unit. So if I'm trading a 4 lot, I sell a 4 lot at the bottom of the opening range. I pay for the trade. I take profit at 48. We get below 40. I can either sell back what I took off, so I'm back short 3, or I can sell another full unit. So now I'm short 4, 5, 6, 7, right? Or 6, and just let the market go. Now underneath 37.40, our target was going to be 37.25. That was a big level. 37.25 is where we settle out the December contract. So that's going to be a pivot for us all year. We got underneath there. It was a flush. I was short from 40. I was short from 1/4. I took profit all the way down to 36.85, and 36.85 was our major target, and that was Friday's low. 1880 to 12,880 to 12,890 was our major downside target in the NASDAQ. And JU, who's short now, was short all the way down and covered there and added them back. That's how you trade. That's how you manage your risk. That's how you manage your profit, so that that's something for everybody. We have, an intraday trade. We have a little scalp, where we pay for our trade. I use 20 cents in crude. It's going to be like $200 a contract. Whatever that is going to be the pay line. So 20 cents a crude, 10 points in the NASDAQ. So once I get to the pay line, I put my feet up, easy like Sunday morning, let the market do the work. And one of 2 things is going to happen. Either I'm on the right side of momentum and the market is going to pay me, or there is no momentum and the market's going to come back and it's going to take me out for a scratch. And in which case I made money anyway. So now I think that those of you who've been around a long time, who've learned how to be consistent, have seen that you have these, you know, what, 3, 4, 5 days a month that really make your month, and everything in between that will be, hopefully you're green, you make a little bit of money, but 3 or 4 or 5 days are going to really make your month. We hit singles, and those singles turn into home runs. Every quarter, every month, you know, 3 or 4 or 5 days, every quarter, a few weeks, every year, maybe a month. And that month of trading in an average year is going to make our year. Unless it's a year like last year, then we're going to have a ton of busy days, or a year like we're going to have this year. We'll have 100 trading days like we had this week. 100 trading days. All right, so 36.52 was our downside target. We stopped at 36.56. NASDAQ, James, hold on. Let me give you a NASDAQ target. Does that make sense to you, Dayton? How we do that? Oh, bless it. Where the hell is it? Give me a second, James. Hold on. Oh, God. 12,715 to a quarter. How the fuck low did we get? All right. I'm sorry. The low was 27. James, I'm sorry, dude. I should have given that to you quicker. So the low was 27. James, look at your targets from Friday, and just use those until I readjust them, okay? Because they're gonna be good. And underneath there, the next target is not for, we don't have anything until 605, 12,605 to 15 in the NASDAQ. So guys, I don't make trading decisions based off of charts during the day. And I know that sounds crazy to people, but I don't. I look at charts, and it's important for me to look at charts. It's important for all of us to look at charts. But the time for me to think is not during the day. The time for me to think is after the close of the market, and before the market opens. The time for me to trade is during the day, and I have to react to my plan. That works for me. You know, I was a floor trader for so many years. I didn't have access to charts. Could you guys imagine not having, those of you guys who have only traded on screens, could you imagine not having access to charts? None of us had access to charts. Some people hand charted, you know, would keep a point and figure in their hands. Some people would keep a bar chart in their hands. But if I wanted if I wanted to look at a chart, I had to walk out of the pit. I had to stand in line at a CQG machine. I had to often stand in line. Sometimes that line would be real long. I had to print it off, and then I'd had to take it with me onto the floor, you know, or back into the pit. Meanwhile, what did I miss? What trades did I miss? Did I miss my out? Did I miss my stop? What did I miss? So I was taught early on by one of the greatest technical analysts and one of the smartest, both also technical analysts and macro analysts in the entire world, who, by the way, could not trade to save his life. But he taught me, he taught Ira, he taught another mentor of mine, Judd Hirschberg, Howard Green, taught many of us, and many, you know, real Hall of Fame traders that none of you guys will ever hear. You know, anybody in Market Wizards, they would never be in Market Wizards. They made much more money than those guys, and they're just off in their own little world. Anyway, Howard taught me years ago to write my plan out in paragraph form. And that's what I do. It doesn't look real professional. It doesn't look great. It's going to be different than what other people put in it, but it works. It works and it's effective. And in that plan, the way that I generate our targets really gives us a lot of really, really good targets. Weston says, what do you look for determine if you want to go long or short out of the opening range? If we're above the opening range, I'm long. If we're below the opening range, I'm short, Weston. And then I'm looking for my targets. So Friday, for example, short at 57. I was short at 57 half, paid for the trade, took profit at 48. Market came back up. I got stopped out. I missed my re-entry. Usually I'm very quick and very fast at it, but I missed my re-entry. And then the market came back down underneath it. The market only, and that's a good point. The ES has a lot of fake outs. It does. So that now that brings us, if we took if you took every uptick out of the opening range and every downtick out of the opening range, you'd be broke in a week. If you had $1 million account, you'd be broke in a week. You just can't, not every target, but it depends on what target, not every, and not on every day. And again, that also depends. If anybody ever gives you guys an answer that is a definitive answer when it comes to trading, they don't know what they're talking about usually, because the answer should always be a combination of it depends. If this happens, then that. If that happens, then this. So Weston, yes, matrix level. You mean, James? Do you mean Judd's matrix levels? Is that what you're talking about? Or are you talking about some other form of matrix? While you're answering that, I want to get back to it, Weston. And because this is important, guys, please just don't listen. Don't take this conversation tonight and go, tomorrow, go live and start banging out trades above the opening range and getting long and short, and you'll end up getting whacked. No, I don't use Judd's. I generate my own matrix based off of the same work Judd does. I learned how to do that years and years ago too. Anyway, hold on, Michael, I'll get there. So back to Weston, because this is really important. If you guys are going to try to do this, I suggest that you come into the group for a few days on a trial or something, and then I'll answer all of the questions that you have during the day, and I'll show you what other factors come into play for me to take the short at 58 or the long above 61.25. Because again, it's not every uptick and it's not every downtick. The market has to be showing me something for me to want to take that trade. I'm not an algorithm. I am really, really fast and I'm really, really quick at my execution, but I cannot compete with the algos, which is why I've decided to switch my whole mindset from being a market maker to a market taker, like I tweeted today. We're able to place a stop order in the pits. Yeah. So Michael, one of the things that I did in the NASDAQ, what I would do is, because I would have really, really big positions on. So, and there would be a lot of my God, there was a big trader that stood on the other side of me, Nico, who hired a guy, put him on a membership, put him on a seat, and put him on a headset, and he put him right in front of me. And this guy would make fake markets during the day, 12 on 1. He was pretending to trade. But what he was doing was he was reporting back to Nico what my positions were, So I would have, when I had really big positions on, other traders and other locals, other brokers, locals, and traders, and even the banks would want to know what my positions were so that they would know if they were going with me or against me. And if they were going against me, was I getting squeezed out? What was my puke point, that kind of stuff. So oftentimes what I would do is I would give my orders, or I would give my my stops to different brokers. Hey, so I give my clerk in order to give Andy in order to pay 70 on 100 on a stop, give Jayhawk in order to pay 75 on 50 on a stop, and I'd spread it around the pit so that everybody would have to, when brokers had an order to fill, even if from a bank, it didn't matter if it was from a bank, a retail trader, or a pit trader, they were legally obligated to fill that order at the best possible price. So I would want to give them to brokers because brokers would match them up in their with their deck, right? Whereas me, if all right, well, I'm going to stop out of this. I'm short 250 S&P or NASDAQ. I'm going to stop out at 70 on 250. Now everybody's going to be 80 on them, 90 on them, even on them. So now I'm going to have to start trying to stuff those guys. You guys all, did anybody read Liam Vaughn's book on Navinder Surreal on NAV? That fucking little English prick. He's a great trader. You know what really aggravates me about that guy is that he didn't spend the money. That's why it dawned on me. But after 03, I got divorced from my first marriage in 03, and my trading, my mindset, and there were a lot of other shit that happened. My mindset changed. I started taking these huge swings. I don't think I had a losing week or a losing month up until that point, my entire career. I mean, I was very consistent. Now I've got these huge swings, 6-figure, 7-figure swings every day. I mean, every day. And this is not, I grew up in a 2-flat on the south side of Chicago with immigrant parents and grandparents. I did not grow up with money. My father was born in Ireland, came here as a kid. My grandfather spent 18 months in New Jersey State Penitentiary very soon after they arrived in this country. I worked on the trading floor 9 years with a 3.5-year break to study to be a Catholic priest. And I earned my shot at trading. So I didn't have 4 or 5 years previous to this. I didn't have this sort of, I didn't have the money that I was flipping around. Anyway, side-by-side trading with the pit was $100 a tick. So if I bought a one lot at 12,000, if I sold the one lot at 12,800 and I bought it back at 12,799, that was $100 on a one lot. So if I sold a one lot at 12,800 in the NASDAQ and I bought it back at 12,790, that was $1,000 per one lot. So a hundred lot was 100,000 every 10 points, right? 200 lot would be 200,000 every 10 points. It was big. It was fun. The swings were enormous. But the way that I learned how to trade and manage my stuff is the same way that I do it now. I'm all in and I scale out. Kind of like the way that I just I explained to Dayton about trading in units, quarters. So I sell a 4 lot, I pay for the trade. With 1 lot, I buy another one. We get through a target, I sell 4 more. And anybody that tells you that you can't increase, most of you guys who think that you increase your size because you've got extra money in your account, that's a sure way of going broke. You increase your size when it becomes the right business decision. Don't just wing it and start increasing your size because you made money last week. That's a terrible thing to do. You'll wind up losing money. What did PAX say? After seeing what you do, I tried to trade all of the upticks, downticks. I need to get back in the room, but have no access to PP. Yeah, no, you can't, guys. And please, whatever you take from this conversation, and I didn't plan any of this. We did this last minute, and that's it. So I'm just talking from my experience and from my heart and from what we're doing. But if you take anything from this conversation tonight, give time. You guys have all seen me tweet that. Give time. Don't give the market your money. Give the market your time, period. If you're going to try to learn how to trade the opening range system that I trade, that's great. Please do it on the simulator. Don't do it with live capital. Anybody that tells you that the simulator is useless is full of shit. Does anybody playing a sport, does anybody that's going to run a marathon lace up buy a pair of On Cloud $300 running shoes and lace them up and go run 26.5 miles? Fuck no. No, man. I'm sorry, excuse my language. I usually don't swear, but when we're trading, I guess I do a lot. So I'll try to be mindful of it. Anyway, slow down, slow down. There was a long period of my career after after 08 and 09, I had a prop room with 20 traders in there trading it, and it was so poorly managed and run. My mother died in June of 08. My sister Elizabeth died in November of 08. And my wife Jen's mother, Kathleen, died in February of 09. In between that, our son Gabriel, who's now 15 years old, was in the hospital for just about 2 months with an immune deficiency. He had a bunch of viruses, but thank God, one bacterial, not bacterial, viral meningitis. Thank God it wasn't bacterial. And then the second one was pneumonia. He had since grown out of it. But anyway, so the whole world fell apart and I wasn't there for it. My prop room failed. It was poorly managed. I wasn't around for it. And I went back into the hog pit, where I went into the hog pit. I never traded in there. It was the last pit to go electronic, and they didn't want me in there. They were it was their club. It was their place. They didn't want some big trader from the NASDAQ coming in. And I didn't have a whole lot of confidence then. I had to kind of rebuild that confidence level back up. I had to rebuild that trust in myself. If you guys are afraid of it, here's another thing. If you guys have any fear, you see me tweet about being confident, carefree, fearless, and focused, and we just say CCFF for short. If you guys are not confident, if you're not carefree, if you are fearful of anything and you're not focused, then cut your size or don't trade. Again, going back to 08 and going to the hog pit every day, these guys put out trades into me every day. Didn't want me in there. I came in every day down $5,000, $10,000, $15,000 without trades. They were trying to run me out. But I would trade back that money. I would make a couple of thousand for the day, 5, 10, 15, 20,000. I'd make it for the day. And I started to earn their respect. And by the time I earned the respect, and I became part of the fabric of that pit, MF Global came and crushed me. And that was a dark, dark time. I sunk $500,000 into my trading account, 100,000 at a time. Still 100 lot PAX, I thought. I blew through $500,000 in a couple of weeks. We sold our house, moved in with my father, drove Uber for a bit. And then my wife and I started to get some money back, and we went down to Key Biscayne, rented a house in Key Biscayne, Florida for a month, 2 months, actually 2 months in the winter, a month in Key Biscayne, a month in Coral Gables. And that's when, we had that hard and, honest conversation about, I don't trust myself to go back and trade. I'm going to go find a job. My wife, who was a clerk on the floor for 18 years and knew me at my best, said, man, I trust you I trust you. I trust you until you can trust yourself. And that gave me hope. So, in our group mentoring, we have group mentoring twice a week, once on Wednesday mornings before the open for an hour, and then on Saturdays at 11 for an hour and a half. And in our group mentoring, we've been working on moving from fear to trust. And that bridge from fear to trust is hope. So my wife, my short little Greek Irish wife, my partner, not just in life, but in businesses, in my business, also, she trusted me, and that gave me hope. And I was able to bridge the gap from fear to trust again because she gave me that hope. And I started trading 1 lots and 2 lots, and I quickly realized, and this is a funny little thought, isn't it? And I think that it's counterintuitive for what many of you guys, newer traders, might think, but you have more risk trading 1 lots than you do 3 lots. You've got more risk trading 1 lots. You've got more risk trading 2 lots than you do 4 lots. You do. In the long run, if you have a good mentor and you know what you're doing, you learn how to trade the right way. Don't fade markets, guys. If anybody is teaching you how to fade markets, don't do it. Don't do it. That's another thing. Holy moly, I can't tell you how much money I made fading markets. I can't tell you how much money I faded markets. But I can tell you how much I lost fading markets. I can actually fucking tell you the number. I've seen traders, you guys have all seen me tweet this too. I've seen traders worth $50 million go completely broke. Imagine being worth $50 million, empty, broke, all because of one bad trade. And you know, not that they blew up that 50 million in that one trade, but they blew up that 50 million because of one bad trade that just continues to go down and go down. So if you buy a one lot, Adam, like right now, if Adam asks, how can you explain how 4 lot units is less risky than one? The way that I manage my trades, the way that I manage all of my positions is I utilize every tick now. As I said earlier, I'm not, you know, when somebody asked me about stops, I'm not going to I'm not going to sell. If I sell the bottom of the opening range, I'm not wrong until we get I'm not wrong being short until we get above the opening range. If I get long above the opening range, I'm not wrong until we get back below it. But I'm not going to put in a stop, you know, bridging that whole thing, because why would I? I've got in the S&P, I've got access to literally every. I don't trade NASDAQ anymore. Maybe I'm too old, or I just don't have the patience, I think, for the whippiness. I don't like, you know why I don't? Here's why. I helped build the NASDAQ. I was one of the locals that helped build that contract. And I got picked off by the Navinders. Navinder would pick me off on 100 lots, and I knew it was him or it was the Russian. We didn't know his name, but we just called him the Russian. Ivan the Terrible. That guy would come in there and pick me off on everything. I'd be selling him to buy him, offering the market 100 at even. Now I'm short 100 or 200 or whatever, 190. Buy him. I don't want to sell those 90s. All right, sold. I sold you 100 because now I'm short a lot. I have to really press those, right? So now I'm selling 70s and you know, and these guys are picking me up. Sometimes it worked, sometimes it didn't. They were already out of it. All right, Nav or the Russian, they were already out of whatever they did, whatever they picked me off on. So if it was 100 or 200 or 300 big NASDAQ that they picked me off on, they were already laying it off in the minis. Now, you know, I didn't trade for ticks and I didn't trade for points. I traded for, you know, moves. It's, anyway, so let me get back to this. How is 4 lots less risky than a 1 lot? Well, 4 lots are less risky than a 2 lot. So the trader that was talking about being long earlier, silver at 26,130, well, he's got to be right. You have to be right. When you're trading a 1 lot, you have to be right on every trade. If I'm trading a 4 lot, I can catch, I've got room to catch a quick, you know, 4 point, pay for my trade. I've got room to put my feet up now, remove my risk, put my stop to break even. So now I can't lose money. And I can wait for those 58s to come down and trade 40. Underneath 40, I can sell more. And what's my risk now? Now I'm short, you know, 6 or 7 if I added a full unit, or I'm back short 3. And what's my risk? My risk is the same being short a 6 lot as being short a 3 lot. I've got the same risk because if we get back up above 40, I'm getting out of my add-ons and I'm staying short from where I was originally. I'm right or right out. I utilize every tick in the S&P. So one thing I'm going to do is I'm going to have more round turns. I'm going to sell 57.75s and buy them back at 58 or 58 quarter inside the opening range. And I'll do that 3 times, cut my size. We call it the 2x4 rule. If I don't find the momentum out of the opening range on 2 trades, I cut my size. I don't increase it. How many of you guys increase your size to get your money back after you have a few trades that cost you money? I don't do that. I cut my size. There's one of 2 things that is going on. Either I'm not seeing the momentum of the market and I'm not trading it, or there just isn't any momentum, and so I shouldn't be trading it. If I've got existing positions on for my runners, well, that's fine. So now if we get down to 37.26 and I take another one off and I'm down to my runner becomes my position. And depending on where the market goes, it can either be a swing position or it could be a long-term position. It all depends on the market. And that's how I have those big month making trades, or those big quarter making trades, or those big year trades. And in the event of last year, you guys remember 30, I'll tell you, I won't tell you how many, or how much, but you guys remember on a Wednesday, we closed 33 in late February, closed at 33.97.5, which was the all-time high. Our target was 99. I was long. I had to stop in at 99 overnight. Got stopped out for a scratch in the opening range. The next day, you can look it up. That Thursday, I don't remember the date, but the opening range was 33.80.5 to 33.83 or 84. I got stopped out. I got short underneath 33.80.5. We got that. We were creeping up. Kind of the dreaded creeping rally. Kind of like the rally that we had these last few weeks of the year. We're just kind of creeping up with no real momentum. I always got destroyed in those trades, in those markets. I would get killed in them. Now, with my 2x4, it protects me. So I keep my expenses, I'm not turning expenses into losses. Remember, there's a difference between, in my mind, there's a difference between an expense, a business expense, and a loss. If I'm selling 57s and I'm buying them back when they get inside of the opening range at 58 quarter, all right, that's an expense. I'm willing to do that to find the momentum in the market. I'm willing to do it twice, and then I'll cut my size and I'll take 2 more attempts, 2x4. After 4 attempts, I don't find the momentum in the market, I'm done. Because one of the things that I did running my statistics back in 2013 is I saw that if I had more than 5 trades, I'm losing money. If I've got more than 5 trades and I haven't paid for the trade, or I haven't taken a perfect scratch, I'm losing money. So why would I want to keep going? I want to be here for the next day when the market's going to be a little bit easier to trade. I want to be here for the next day when we set the opening range at 58.61 quarter, 58.61 quarter, and we go off for 58. We don't come back and we just run. And all I have to do is pay for the trade, take profit, put my feet up and add when we get to targets and add. Guys, trading is simple. It's that simple. That simple. And when I had long extended periods of my career where I couldn't buy a winning trade, and believe me, I've had extended periods of my career where I couldn't buy a winning trade, which is how I ended up driving Uber, which is how I ended up living with my father. I ran my statistics and I saw that if I had more than 5 trades, I was losing money. And so I knew that I had to cut my size, and I knew that I had to learn how to trade defensively first and foremost. If you listen to any interview that Tudor Jones has done, Tudor will always talk about how defensive trading is the most important part of trading. Oh, I'm sorry, guys. Dayton, I didn't know it was Nav until later. I knew it was the Russian. Do you guys all know Jedi Marcus on Twitter, right? Jedi Marcus was one of the very first his name is, well, I won't say his last name. Jedi Marcus was one of the very first electronic traders on the trading floor. He was a beta tester for Globex back in the mid 90s. Anyway, Mark was an integral part of the advent. Jedi Marcus was an integral part of the advent of side-by-side computer trading. I wonder if I can find a picture of what it would look like, when we were on the floor. Anyway, so the pit was here, computers were over here, and Jedi Marcus would tell me, we'd go and have conversations, and I was lost. I couldn't understand how. I just didn't understand why what worked so well for so long all of a sudden, didn't work. And I didn't have the experience to make the necessary adjustments. Or no, I didn't have the knowledge to make the necessary adjustments. I started to make so much money that I didn't need my mentor, Judd, anymore. I didn't need, other people around me. I always stayed close to Mickey. Mickey and I were in business together and clearing and stuff. But I needed to realize that I was I had clay feet like every other trader. And no matter how much money I had, no matter how, no matter how many people jumped out of the way when I walked on the trading floor, I was one bad fucking trade away from driving a truck again for my uncle. Holy moly. All right. So me and Jedi Marcus had breakfast with some other computer traders, and he was just, we were talking about the Russian, and we were talking about, this other trade, nobody really knew the guy's name from the UK, who was just becoming bigger and bigger and bigger. Now the Russian was always big, always. He just came on the scene trading 1,000 lots in the minis. 1,000 lot in the mini was a 200, I think 250 lot in the pit. I mean, it was, I would trade 10,000 minis every day, and I trade anywhere between 2,000 to 5,000 big NASDAQ a day. And sometimes more, sometimes most, when I got my shit together, less, a lot less. So please, over trading and fading markets will destroy your careers. Over trading and fading markets will kill more traders than any other issue. Thinking you know what you don't know, thinking you're better than what you are. And guys, I can rattle off everything that I've done wrong. My God, ask me and I'll tell you. I want to get to what Olaf said. He said, it's so tempting to add size and fight, but it's a learned habit to have great management like this. Yeah, brother. And I can't tell you how true that is because I lived it. Oh boy, I lived that. And to Adam, to complete the thought about how four lots, not 4 units, 4 lots. So think of a unit as, I think of a unit as however many contracts I'm trading is my unit. So if I'm trading 4 lots, that's going to be 1 unit. So if I'm short 8, I'm short 2 units, okay? So a 4 lot is less risky than a 2 lot because I'm going to get out at the same place. But in order to make the kind of money that you're going to make on a 4 lot, which is going to clean up a lot of your business expenses, you need to be involved in the market with more than 1 contract. So if I sell a 4 lot out of the opening range, I stand to make maybe $10,000 in a 100-point move, right? Pay for my trade, take profit, put my feet up, and don't add. I'm going to make 10 grand easy. If I'm trading a 1 lot, I have to be right for what? How many points to make that? All right. Do you only trade ES or do you trade multiple different products? DM, I trade. That's a great question. I trade 30-year bonds. I trade gold. I've been wanting to be long silver from $17, and any of the traders in our group, in my group, will tell you that I've talked about being long silver, and I just missed every entry point. So I don't chase markets. It's one thing I don't do is if I don't get them on from where I want to have them on, then it's not my trade. I let it go. Again, defensive trading. It sets me up to be there for when I do catch those moves, when I do catch those trades, and I manage them properly. So I trade bonds, I trade S&P. I don't trade NASDAQ so much anymore, but I will. If I miss the S&P trade, I traded NASDAQ the other day and got short underneath the yearly opening range. No, I got shorted a target and covered them at the yearly opening range. Just a couple contracts, a 4 lot, but not many. I trade 2019. Most of my year was in gold. I love trading gold. I love trading bonds. 2020, a lot of my year was in crude until that, except for the volatility in the S&P. I've learned, and this isn't, we talked about this Saturday morning in group mentoring, and I'm not going to go too deep into it, but so many traders are in options and, here or there. You got 3, 4, 5 different markets you're watching and trading. And I used to be the same way. One thing that this group that I've learned in this group these last couple of years is that when I focus on 1 or 2 markets, I've made a lot more money trading 1 or 2 markets than I have trading 4 or 5 or 6 markets. I become, remember that phrase, what is it? Jack of all trades and master of none. I was pretty good at pulling a little bit of money out of a bunch of markets, but not a lot. And I wasn't maximizing my profitability. I talk about the 4 pillars of capital management. I got all kinds of little silly sayings like this, but you know, I come up with these kind of things that stick in our minds. So the 4 pillars of capital management is every single trade. We have to fulfill the 4 pillars of capital management. Number 1, we have to minimize our risk. Number 2, we have to remove our risk. And number 3, we have to maximize our profit. And number 4, we have to exploit our profit. What's the most important thing you watch that helps you? Oh shit, Vince, that is, I got I think a direct message from a trader that asked me what the most important thing that helps me put on the opening range trade. That is a multi-layered, that question takes a long time to get the right answer on, or not to get the right answer, but to understand the nuances of it and the subtleties. I'm looking for matchups. I'm looking for how the equity market, I'm looking at the stock rotation that's affecting the indices. So I'm going to look at the capital flows. You know, they're taking money out of gold, they're putting it in equities, they're putting money in the bonds, taking it out of the equities, that kind of shit, that kind of stuff. I mean, and my targets, I want to see how the markets are going to be trading down to my targets at the same time. And when I can start to identify, you know, the S&P, the NASDAQ, that the NASDAQ is rallying above the opening range, but the S&P is selling off. Is that a trade that I want to take? Oh, I don't know. Depends on the price action. So the answer is, Vince, to that question, what's the most important thing I watch? I guess the most important thing is matchups. What does matchups mean? That I can write a book on it, I guess, you know, on at least what I mean by it. I don't use big terms, guys. I don't care to sound smart. I can sit and I can talk about technical analysis with the best of them. But as you can see on my charts, they're relatively clean, except for my metals chart. Here. I've got VWAP up. That's it. Oh, not that one. That's my metals chart. So I've got the Imuku cloud and just other things. But I don't use indicators. I don't use indicators. I trade my targets. The market moves like a ladder, you know. Jimmy Jude said to me one time in a conversation that he sees it as window panes. But the way that I see the market moving, and I'm talking about the S&P, gold, GameStop, it doesn't matter. Bitcoin, oh fuck, Bitcoin. Oh, I love that market. Bitcoin is like trading the NASDAQ back in the oh Lord. I don't want to get into Bitcoin unless you guys want me to. But anyway, the point is I see the market trading from like a ladder, from one rung to the next. So below 30, we'll just stay with last Friday. Below 58, 37.58, 37.40, the early opening range. Under there, 37.26. Under there, next rung, 36.85. So we didn't have a target from 37.25. We didn't have a target until we got down to 36.85. The low was 36.85, and we all took profit there. And I had my finger on the button to really load up on the short side if we got underneath it. So Vince, I wish I can give you a more direct answer, and it's not like I'm holding anything back. It's just, brother, it's a multi-layered answer. That's why I'm, again, for those of you who just joined, I highly suggest if you're going to listen and you're going to try to implement some of the things I'm talking about doing trading, please, please, please do it on the simulator. Do not do it live. Again, give time. I didn't think, I didn't finish this point. After I struggled and my wife and I were, you know, most women would have cut and run, but my gosh, I can't tell you how blessed I am. I just couldn't, I can't. Anyway, and she would say the same, I hope. When we were struggling, you know, I tell the story about looking for nickels, dimes, and quarters for milk on a Saturday night. After MF Global failed, we still lived in Lake Forest at the time. MF failed, and I was pouring just dumping money into my trading account and losing 100,000 a week. It was ridiculously terrible time. No idea what was going to go on. Nobody had any clue. I had 1,500 hog spreads on that vanished. So we had food in the house, but and there's a point to this, and I'll hopefully tie it together this time. We had food in our house, and I had my 2 older kids from my first marriage who both have trusts. And I didn't know this until just a year or 2 ago, is that my 2 older kids knew that we were struggling, even though I didn't think they did. And they felt guilty because they knew that they weren't. Fuck, they felt guilty coming to our home, knowing that I had to make peasant food for them, what my aunt would have called peasant food. Anyway, this weekend in particular, I had a new Suburban and a Mercedes still, and trying to sell those fucking things. And the point is, we were overdrawn $60 in our checking account, and I had no cash. Jen didn't have any cash either, and we were just, there was no milk. We had 5 kids that were looking for milk, so we started to look in the couch for change, and then look into the car seats and in the car, on the floor and in the seat for change. We were searching the back of the Suburban in the garage, and our eyes met, and both of us started to cry at the same time, crying, weeping, and didn't say anything. She didn't yell at me and she knew what was going on. She knew how hard we left, but we made it through that together, and because of that, our relationship has never been stronger. And because of that experience, I'm a better trader now than what I ever have been. Not only am I a better trader, but more importantly, I'm a happier man, and I'm a more productive man. I'm in better shape at 52 than I was when I was in high school, and I was a high-level athlete in high school. All right, I'm maybe not. I'm in pretty damn good shape. I'm in better shape than I have been since high school anyway. And all of that shit is all of this stuff from everything I do, from the time that I wake up in the morning, same time every day, I go to bed at the same time every night, all of these things, and I take care of myself, all because it helps me stay within my lane. All of these things, my rituals that became routine, that became habit, help me bridge that gap from fear to trust. I trust myself a lot more when my life is structured. My trading is going to be more structured when my life is structured. My trading is less likely to be erratic when I got structure in my life. One of the things that I think most of you guys should learn, if you don't know this already, the market action, the price action is not random. We may see it as random, but it isn't random. It's not erratic and it's not random. But if my life is erratic, I'm more likely to see the market as being random. If there's structure in my life and there's clarity in my life, then I'm going to be able to visualize the market pretty clearly. And I'm also going to be able to take pretty clear action in the market, and I'll be okay. So my wife and I will never get back to that point. Where we're looking for change to buy milk for our kids. I can't express to you guys the importance of learning how to be defensive traders, but at the same time, staying open to the bigger swings that the market has for us. You can sit, again, the big technical jargon and the really smart sounding things, it's not for me. What's for me is managing my risk, managing my life, managing my mindset, managing all of it, so that I can take advantage of what the market has for me. Every single day I can take advantage of what the market has for me. What scares me a lot about this Wall Street bet stuff, Reddit traders, and is not what scares me. A lot of it, most of it thrills me, but what scares me is the traders that are going to get hurt, the people that are going to get hurt because they don't know how to manage their risk. They don't know how to take profit. Nobody told them to take profit. You know, hey, you got $200 into a stock and 1,000 shares. That's great. Well, you know, you can't eat that unless you're able to take profit on it. Now, like we were talking to the trader earlier who's long 2 silver contracts. My suggestion is always going to be to take profit on one of them and leave the other one go. What good is it if it comes back for a scratch? And it very well may do that, right? Come down and fill that gap, and now you're screwed. You had $3 into it. That's a lot of money. Now, what does thrill me, self-trust and proper management sounds like a huge key. That is your edge, Olaf. That is your only edge. That's it. That's your edge. You're your edge. I don't fear the market. Anybody that tells you, yeah, you got to have a healthy fear. No, you don't. You can't fear the market. You can't fear anything. I don't fear the market. I had to have a 7-figure losing day. And I did before I realized that the market can't hurt me. Only I can. My edge is not my technical acumen or my fundamental acumen. My edge is the fact that I make my bed in the morning. My edge is that I get up at the same time. My edge is that I read. My edge is that I've got notebooks all over the house where I write down little thoughts. I'm trying to centralize them all on my iPad. Also, all right. Oh, by the way, for those of you guys in our group, I'm not covering my runners in the S&P until we open tomorrow, and then I'll make a decision based on price action then. But not now. As long as we're under 36.85, I'm safe. So my stop is if we get back above 37.26 and the break is over, we're going to get above the opening range and then continue to rally. Shorts in the NASDAQ is going to be above 12,800. Remember, 12,800 equals 37.26. Same thing. Those are matchups. 12,800 equals 37.26. All right. So the things that thrill me about what's going on with GameStop is, have you guys ever heard somebody that works at a bank or for a hedge fund tell you that independent or retail traders have absolutely no chance of making money? I've heard that a million times. And for a long time, I believed it. And it was much more difficult for us after we left the floor. There was a movement, and this is what I was tweeting about. The market started to change in the 90s. Computerized trading changed everything. But there was much more than just that. There was a big movement, and I don't know why, but to kind of rid the trading world of independent local traders. I don't like the word retail or day trading because it cheapens what we do. I'm not a day trader, although I am, and I'm not a retail trader, although I fit that too. But I'm an independent local trader. There were 2 kinds of traders on the floor. There were brokers and there were locals. I was a local. A broker filled orders. A local was a trader. So anyway, the words I pick, I choose my wording carefully because it goes back to my mindset. If I repeatedly call myself a retail trader, then it's got negative connotations in my mind. I'm not the next coming of Warren Buffett. I'm not the world's greatest trader. I'm just a trader, doing his best every single day. I happen to be pretty good at it, and that's it. So I'm good at 2 things. I'm good at trading my own shit, and I'm good at helping traders become better. I'm helping at bringing out the best in traders and finding what they need to change. I've always been good at that. I guess my wife calls it me living my priesthood on the, now. Anyway, so remember I was going to be a priest. So what excites me about what's going on is, in the 90s, there was a move kind of away from local independent retail traders. They didn't want the independent trader. They wanted, the markets were being more and more controlled by these black pools, synthetic, all of these, all of, you know, the advent of CDOs and all of these derivatives that are 10, 15, 20 asset classes away from an actual real asset class, you know, unregulated, you know, those CDOs that destroyed the financial system in 08. Well, that was the camel that broke the financial system in 08. And not even that, you know, they're synthetic. Listen to the word synthetic CDOs. Synthetic means fake. They're not even real. Anyway, and they were unregulated. There was a woman named Brooksley Bourne that was the head of the CFTC under Clinton that tried to regulate it and tried to regulate the use of these CDOs and synthetic, you know, all of this, these synthetic derivatives. And Greenspan overrode her. Took her. They had congressional hearing. You don't want to hear that. So what they did, and there was a very high level CEO of the CME group told me this years ago, is our memberships, we got shares in exchange for our seats. That was shares in the exchange. So when we demutualized, we got shares in exchange for our memberships. I got 12,500 shares, and well, that's another divorce debacle story, but that was our going away present. And that's the way that it was explained to me by a very powerful person in this industry, somebody that most of us probably know. He said, listen, Matt, don't do anything with it. You know, it's it's already gone. My ex-wife has it. But this is the going away present. This is enough generational wealth for you to be able to take care of your family. Don't sell it, just edge out, blah, blah, blah. That stuck with me, and that hit me like a ton of bricks. What do you mean our going away present? This isn't over with. Yeah, okay, we'll be going to the screens, but it's not over with. He just kind of walked away. But gradually it became over with. Everybody started to go broke. I mean, everybody started to kind of go, you know, either retire or they went broke. And then the traders that tried to make the switch to the screens didn't have a very good or very easy time at it, because they were still trading the same way off the floor as we did on the floor, and it just doesn't work that way. So it took me a long time to be able to adapt my system and my method, and then to flesh it out and develop it more so that it was effective, repeatable. You know, I needed to develop a system that was going to be consistent, repeatable, and scalable, and simple to understand and implement. And by God's grace, I was able to do that. Oh, hold on, Leaf. I'll talk about that in a second too. Also, you know, so then gradually, you know, the retail traders started to make money again, right? Retail traders we all started to be able to find our footing. Now, we weren't making the kind of money we did on the floor, but who cares? Who needs to? But gradually, we all began to be profitable again, and things started to work out. The retail traders became more and more integral part of this business. So much so that CME comes up with micros, you know, micro contracts, microcurrencies first, and then micro S&P, all of it. And they'll continue to develop micro contracts for real micro contracts for gold, silver, you know, crude, eggs, metals, everything. Anything that lists, there'll be micros. ETFs, excuse me, all of those things geared towards the individual retail investor / trader. There's a difference between investing and trading. So anyway, what I really like about this Wall Street bets, Reddit, GameStop shit is that it's the retail trader that is starting to take control of, or the independent trader that is starting to take control of the markets again. It's the independent trader that is now starting to become not just profitable like we were, but starting to gain more and more importance, and starting to scare the shit out of the major hedge funds, and starting to scare the bejesus out of the major banks, and really starting to flip out the Fed and the Treasury. I don't know how this ends. You know, the Fed has no exit strategy, as Ira Harris talks about. And that's scary, that the fact that the Fed doesn't, the fact that the Fed has no exit strategy and keeps building debt upon debt upon debt, as I tweeted out this morning, why why we think that, we're not susceptible to the laws of gravity, but eventually we will, just like Great Britain did pre-World War II, and just like Roman times, right? I mean, it's going to happen. Yet we're not going to be able to spend our way out of this. So I think that this whole thing represents the coming of age of independent traders again, independent investors again, and that's exciting to me. It's very exciting. Now, as I talked about when we finished with Anne-Marie, our conversation with Anne-Marie Van the other day, Anne-Marie Trades, all of these great, lofty, incredibly important conversations that we have on a macro level the other day, none of it matters if we don't know how to manage our risk, and if we don't have a proper mindset, let alone a proper method to trade. Again, the greatest guy in the world, Howard Green, who taught some of the greatest traders in the world, including me, mostly indirectly, but partially directly. All of it was, he was a terrible, terrible trader. But he was just like, Pete Stottlemyre. You guys all know who Stottlemyre is with market profile. Not a good trader. Pete Stottlemyre is a brilliant man. I traded under him for 6 months after my prop room failed, when he was trying to update market profile to bring it into the age of algorithms. You know what the man that invented market profile says about market profile? Does anybody know that? All you guys who use the profile, and I use the profile. I'm not poo-pooing the profile. I still use the profile, but I do not use the market profile for trading decisions. I use it for putting the market in context. Pete Stottlemyre, the man who invented it, said that market profile ceased to be relevant in about 2002, 2003, when the majority of volume was created by computers and not people. And so he tried to update it, and I think it was 06, not 06, 08, 09. It was after my prop room failed, sometime around that. And it didn't work. It just didn't work. But man, that guy was so smart. I understood maybe 2 or 3 words in every paragraph he said. And I sat, and he would sit there with me. There was me and one other trader. He would sit there and draw on this whiteboard, trying to explain to us what he was doing. And I'm not a dummy, but my God, this guy's stuff was just flying over me. I had no idea what he was talking about. All right, Leaf wrote to me in a direct message. I think that's you at the bottom. I think that's you at the center, the bottom center of image, and top left of the screens. Oh shit! What do you mean? I think that's you at the bottom center image pit. Oh, that thing, the painting? Yeah, it is. Is that what you're talking about, Leaf? That thing? Oh, my wife had that made. Oh wait, hold on. Let me see. Hey, there's Mark, and there's me. Yeah, right next to Craig Gordon. Holy cow, there's Jedi. Ha! You got to put that in here, Leaf. Leaf, drop that in so everybody can see it. That was in, you can only see like a quarter of my face. I was hiding behind Craig Gordon, and you can see Jocko and the other brokers in there. And then, actually, this is a really, really good thing to look at. I'm under the broker with this hand up. You can just see my face. I'm right below Woody, next to Craig Gordon. The guy in the red jacket with the checkered thing, that's Jedi Marcus. Those are all the original, that line of traders right there were the very, very first computer traders. And that was the best spot for them to be in. That's hilarious. That's awesome. Yeah, thanks, Dayton. I mean, I started on the floor as a runner in 1989. The neighborhood I grew up in, I tore up my knee my senior in high school, so there was no football for me. I went to college for a semester, and that was a joke. I was driving a truck for my uncle. He owned a small trucking company on the south side. I was driving trucks around the city of Chicago, and my father, said, "Look, you gotta figure something out here. You gotta become a policeman, go to work for the city, become a cop or a fireman, get a trade, learn a trade." I didn't want to. I didn't know what I wanted to do. I didn't know any of those things. So one of my best friends was a clerk, a phone clerk. He had been working for Rosenthal in those days. It wasn't RCG yet, Rosenthal. And they got me a job as a runner. My first job was running orders to the lumber pit and to the backmonth euros. I made $90 a week after taxes. And I'll tell you that I walked on the trading floor. I didn't know one person, not one person. The only guy that I knew in the business was, he was a phone clerk off the floor. But the second that I walked on the floor and they put me on a badge, I knew, or in a yellow coat, I knew that whatever the hell is going on in here, I want this. I don't know what it is, but I want it. And I worked my ass off in order to figure it out. I literally worked every job up. If they asked me to be a janitor, I'd have done that. I think that there's a trader in here tonight with us. I think that was, he was the guy that I replaced when he got his membership. Well, let me see if he's in here. No, he's not. It was earlier. Anyway, I replaced him when he got his membership and started to prepare to fill orders. You had to be a member for a year before you can fill orders. So I replaced him as a clerk, and that was like the big leagues. That was AAA. When you got hired by this group, you had a future, either as a broker or a local. And we had a meeting, and the guy that we worked for was expanding his operation into every area of the Yerdauer pit. And he was going to put me and this guy, Marty Walsh, in the second option. He was going to put us both on memberships. We earned the right, and we worked hard to do it. And I raised my hand in the room full of Jewish guys, a couple Irish guys, a bunch of Italian guys. And I said, Steve, before I signed this contract, I didn't plan this. I really didn't. I think I'm going to go to the seminary. I want to study to be a Catholic priest. And everybody looked at me like, you crazy? I was like, I worked hard to earn that shot. Anyway, when I came back from the seminary is when I went back to work for Steve, and Steve said, "Oh, all right, I'm retiring." He was a young man. He's only early 60s, mid 60s still. And he said, "All right, I'm retiring. What do you want to do? I'll give you a shot to be a trader if you want to trade." I just got married. My ex-wife, her family was on the floor. They were order fillers. I didn't want to work for them. He knew it, so he backed me. All I had to do was come up with the trading capital. I put $10,000 into my trading account, and he put the T-bill up. So, in those days, you had to have at least $100,000 to trade. At least you could not trade without 100,000. I had 10. So Steve had guaranteed me up to 100,000. I got down to 200. I still have the statement. I had 257. I got down to $257 left in my account. As I told you guys earlier, it was $100 a tick. So just one more trade could have wiped me out. And the only thing that he asked me was to not go debit. I said, "Oh God, what are you kidding me? What am I going to do now?" So I made appointments to go talk to a bunch of prop guys, and I went and talked to one of them. I went and met with Mick, and I ran into this kid from my pit, Mark Weil, a Jewish kid from the North Shore of Chicago. The Chicago Mercantile Exchange was mostly Italians and Jewish. The Board of Trade was mostly Irish and and also Jewish, but yeah, very ethnic, because Chicago is. So talking to this kid, I was still smoked then, and he and I were outside having a cigarette, and I told him what I was doing. He said, "Don't do that. The NASDAQ is going to explode. We were doing 3,000-4,000 contracts a day. A busy day would be 5,000 contracts in volume. That was a busy day. Now what's it do?" when side-by-side trading, we were doing it came about, we were doing 100,000 big contracts a day, and the minis were doing, small, but then eventually, that switched. And that's when everything changed. But anyway, Mark told me, don't sign a contract to where you're going to be giving half of what you make away for the next year or 2 years or 3 years. This market is going to explode, and this is going to be the last great floor. This is going to be the last great pit on the trading floor. Don't do it. And it was, and he was right. And I'm glad I didn't. I happened to meet Judd that afternoon, and Judd taught me how to trade. I had Mickey as my mentor and my coach, and he taught me how to think, fight, and act like a trader. Judd taught me how to look at the markets, visualize the markets, and we continued that with Ira and everybody else. That's why I do this, by the way. If any of you guys listen to the podcast or the interview, not the podcast, but an interview that Credelli did a couple of years ago with Ira Harris and Rick Santelli, I posted it last night. Go back and listen to at least the first 20 minutes of it. Go back and listen to at least the first 20 minutes of it. No, actually listen to the whole thing. It's incredibly important. Still, I mean, it's 3 or 4 years later. So, but one of the things that Ira said, and I talk about this a lot, is and this is why I do this, what I do, with the group and what I do with you guys is tonight is on the trading floor. I had maybe 4, 5, 6, 10 different mentors. I was able to talk to Ira and ask him questions about what was going on global macroly, because I knew that he was the best one on the floor to talk to. I can watch guys like Louis Porcelino or Steve Prosnewski, and I can ask Steve questions, and he would either answer them, blow me off, and be an asshole about it. Not an asshole, but he was a trader. He was a huge trader, and he had his own things. Or he would sit and answer questions for a new small trader. I don't know how in the hell you guys do it. I have no clue. How many frogs do you have to kiss before you find somebody that actually knows what the fuck they're talking about, is actually doing what they're talking about, and are any good at it? And not only that, but also honest enough and experienced enough to be able to say, I have made every stupid mistake that you guys can even dream of. And I've even invented some shit that you guys haven't even done yet. And I can guarantee you that you'll run across this shit. I had a guy who was helped me get this whole group started, and just that ended up starting his own group, and he's teaching people a different version of the opening range, which is fine because there are other versions of it. Mark Fisher, he had his own version of it. Toby Cravel also had his own version of it, but they all started the same way I did. Anyway. How many traders, how many frogs you have to kiss before you find, what works? Those of you guys who trade stocks. Now listen, John Hirschberg, my mentor, I don't speak to him anymore. He and I don't talk. I'm not plugging him for any other reason, except for, even though he and I aren't talking, if you guys are trading options and stocks and that's your focus, find white wave trading and join for go find white wave trading. White wave trading. He's on Twitter. He's on the internet. That's a direct message. Fuck. How do you put it in a regular thing? I'm sorry, guys. I don't know how to work this shit. Here. Wave. The only thing I know how to do on the computer is turn it on, off, point, click, and trade. There. Go find him on Twitter. If that's what you're doing, go find him. There's nobody better at technical analysis when it comes to that shit, and he's a very experienced guy. Look him up, Judd Hirschberg. And again, we don't talk, so I've got nothing to, I've got no, financial interest or otherwise, right? Oh shit. Stevie, what's wrong? What did I miss? Filler, what's wrong? Filler. All right, yeah, so Dr. C put it in there. White wave trading strategies. So if you guys, if your focus is on, he's not mindset, believe me, he'll tell you, he doesn't want to know anything about what you're thinking or feeling. He's just, he is just matter of fact. But I'm telling you, there's nobody else better at stocks, at technical analysis and pragmatic technical analysis in the entire world. I mean it. Ira Harris, there's nobody better. Nobody better at macroeconomics than Ira Harris. Nobody. Hey, Jen, will you grab my charger, babe? Yeah. So there's nobody better than Ira. Mindset. My gosh, on Twitter, you've got Tom Canfield, who's a dear friend of mine. You've got Anthony Credelli, who's like my brother. Anthony and I have always been close. And I don't know. Anybody that's teaching you to fade markets, run. I know a lot of traders. I'm telling you, I know a lot of traders who have made a fortune fading markets, but I don't know one of them that still has the money. I know a lot of, I'm being as honest as I possibly can. There's another trader in here who is one of the biggest brokers in the S&P pit. Pocket, are you here? Pocket, are you in here? Yeah, plug it in, baby. Just plug it into the wall. Thanks. All right, he's not. But I'm sorry, guys. My thing's about to run out of battery. My iPad's running out of battery, so I got to plug this thing in. Hold on. All right, go ahead. Just one more. One more, baby. Thank you, daughter. See you, baby. That was my 14-year-old daughter who was running out of the room before I put her on camera. Anyways, the only reason I say all that is because there's too much garbage out there of traders showing you how to do this, that, and the other thing, and all of it's garbage. It's just garbage. Now, that doesn't mean that there isn't a lot of groups and a lot of rooms that are good. I'm just not familiar with them. I'm really not. And I don't mean to be an asshole about it. It's just that I'm not. And I'm not here to sell you anything either. So please don't think I'm doing that either. Nobody will ever accuse me of trying to market anything to anybody. The only thing that I'm trying to do is share my experience with people. If, there's a lot of you guys who have DM'd me on Twitter. I always suggest to join my group on a trial basis and ask as many questions as you can when you're there. I don't ever pressure anybody to join. I make my money trading these fucking markets. All right, now listen. I'm going to wind it up and go eat my dinner. The one thing I want everybody to know, and I want you to realize, is that you are your edge. I also want you to know that if you're struggling trading, oh wait, Dayton said something. What's the best way for a new trader university student to build? Oh, hey, Dayton, the greatest thing that the CME did for independent retail local traders is start the micros. So trading micro futures, you can build a career with $1,000, $2,000 slowly. You're not going to, with trading the micros, you'll never lose, at least you shouldn't, at least you should not lose more than $100 in a day. And your good days will be anywhere between a few hundred to $1,000. So ease your way in, find a good group to join, find a good mentor. And when you find a good mentor, don't leave them. I've seen all of the comments on Twitter, people saying, oh, you got to do it on your own, got to do it on your own. Yeah, okay. The traders that say you got to do it on their own, are they making money trading? Anybody who's showing their P&L on Twitter, garbage, not true, simulated P&L. I won't show my P&L. I don't know what my P&L is. That's something. I don't know what my P&L is until, well, if I do, it's not until the end of the week, at the end of the month. I don't ever want to know what my money is. My wife manages my accounts. She'll take out what I make. She properly funds my tax account. That's it. I trade. I don't want to know what the money is. I don't want to know what my P&L is. I know where I'm short from, and that's it. I haven't even logged in. I'm not logged in. I mean, I've got CQG up, but I'm not logged into my front end. I'm not going to cover anything tonight. My stops are in. I'm protected. I won't look at the market except for to do my homework, you know, to make my targets for tomorrow. I'm not going to look at the markets. I have nothing to look at them for. I'm not going to cover anything at 36.85. I did that Friday. So let me just get back to a couple of things. Is I want you all to leave here knowing that it's possible for you to have a great career as a trader. Anybody who tells you that it's impossible doesn't know what, or that, yeah, anybody that tells you it's impossible doesn't know what they're talking about. It's tough as hell. It's harder. You know, I hope I made that clear tonight. I made a lot of money in my career, and I ended up broke. Now I walked off the trading floor with a hell of a lot of money. I got divorced, and I gave it to, you know, my kid's ex-wife, and what I came out of it, I ended up with you know, investing in all kinds, just terrible business decisions. But I never blew up trading. The closest I came to blowing up trading was when I was, you know, putting money into my trading account to try to make up for what I lost in MF Global. Now, eventually I got most of that money back, but not the profit that I had into the trade. And that's a whole nother story, and I can talk about that for hours. So hold on, Olaf, I'll get to you. And another point too is, you know, to take it easy, give time. This is possible. It's very hard. It's all encompassing. When I'm watching movies with my kids and something, with my 3 younger kids, and something pops up that I think that resonates with me, I write it down. You know, something that has something to do with my trading, I write it down. Last night, Saturday, to prepare for the week, I was catching up on my reading and reading some. I'm reading not a new book, but I'm reading a book by Chris Whalen. Oh, divorce will kill us. Absolutely. It'll kill any of us. And, you know, and Elite, that's important, because divorce will ruin the best of us. You know how I always say it's that one bad trade that will ruin our careers? It's not just one bad trade that'll blow us up, although that has happened. It's that one bad trade that we follow up with another and another and another. And we start a downward spiral that doesn't lead to anywhere good. That just becomes gambling. Oh, that's another thing. We're not gamblers. If you've got a gambler mentality, do yourself and your family a favor and shut your accounts down. This is not gambling, and it's got nothing to do with gambling. And there are, you know, for people that play high level poker with all of these different theories and mathematical stuff, that's one thing. My mind does not work mathematically. I don't have an analytical mind like that. But I don't gamble. This is a business like any other, like a pizzeria. You know, I have to. It's the same thing. If I own a pizzeria, I want to invest in the best sort of oven. I want to have that. I've got to hire people. I'm going to have expenses. I want to have the best mozzarella cheese. I want to have the best sauce to put on the pizza, right? Or the best crust. I want to have all of that, and that's going to cost me money. I'm going to have to outlay that money in order for me to be able to reap the benefits of my product. It's the same thing. Every day I'm willing to spend money to make it. I'm not willing to lose money. That's gambling, but I'm willing to spend money to make it. And I don't win money. I earn it. So once your opening range trade is exited, are you done for the day as far as executions, or do you sometimes trade the breakouts of other levels? No, Olaf, I will trade not all my targets, but some of my targets as another opening range. There's a lot of times where I'll miss the move, you know, where I'll take my 2x4, my 2 trades, cut my size, and you know, then I get to another 2 trades where I don't pay for the trade, or it's not a perfect scratch. So if I have those, that if I reach my 2x4, I put myself on the bench and I'll come back, you know, I'll get up, I'll walk away. That's important. Oh my God, that's important. If you find yourself if you institute the 2x4 rule in your trading, if you're an active trader, protect yourself. If you find yourself starting to overthink or overtrade, get up and walk away. Go take a hot bath, take a hot shower, you know, soothe yourself, calm yourself, go for a walk, go for a run, work out, do some yoga, do some stretching, go make a pot of tea, whatever. Just don't sit in front of the screens and keep trading. You'll go broke. Get up and restart and reboot your day. Come back, sit in front of the screens and give yourself another 2x4. But always, always, always protect yourself. So there are a lot of trades, Olaf, that I'll miss. You know, a lot of breakouts from the opening range that I'll miss. But if we get down to a target, if the momentum is there, we start taking out some of these bigger targets, not every target, but these bigger macro targets that I have, these bigger levels, then I'll use that target level, like, you know, say it's 37.39 to 37.41. I'll use that as another opening range, and I'll trade that either from the long side or the short side. So but that's not, and that's another subtle nuance, right? Another subtle difference. I don't ever fade markets, but first time down from the all-time high of 38.62.5 or 38.62.75 down to the yearly opening range of 37.48. That's an exit point, flat there, and we caught that. All of us caught that break in our room. We were short from there, and we flattened at 37.48. Not everybody, but some of us. That's the only place where I'm going to reverse and get long at every single time. I don't buy breaks. I don't fade markets, but the first time down to certain levels, I'm going to use that target as another opening range. And to me, it might be semantics to you, but to me, it's a completely different story. All I'm doing is using my 38 to 40 or my 38.47 to 49 target as another version of the opening range. So I'll get long at 49. If the market gets inside of that target area, I'll get out. But if the market protects me, I'm good. I trade ES and find that yes, yeah, it does. It does, Elite. It does. Not every day, you know. I think years ago the stat was like 15% of the time the S&P came out of the opening range on the first trade. 15% of the time. So, you know, what do you do the other 85%? Have to know what to look for. Have to, you know, take into account, like we said earlier, other factors. If you take yes, okay, yes, fade markets is counter trend. Yeah, you know, so if we're breaking 100 points and you're I'm gonna get long here. Again, Kay, I know a lot of traders have made a fortune doing that, but I don't know any of them that kept it. And I mean it, not one. So, Elite, you know, to all of these other factors in determining which attempts out of the opening range I want to take, that takes a while, and it takes a while to see what those things are and to understand them and to be able to act and react off of it. If we take the every attempt out, every uptick and every downtick, all of us would be broke pretty quickly. That's why it's got to, you know, again, give time. Don't be in a rush. Don't be in a hurry. Learn how to visualize the market. If you can visualize the market, when I speak, I close my eyes a lot because I'm visualizing what I'm saying. I have to count on my fingers. You know, I do. I really do. I stopped helping my kids with their math homework in about 3rd grade. And for a trader, people find that kind of ironic, but I see the market kind of naturally, and I've got near perfect recall. I can tell you trades that I made in 2006. Well, I didn't make a lot of good ones, so I can tell you all the bad trades I made in 2006. If you give me the day and the circumstances, I'll be able to come up with it. I just, you know what I mean? So anyway, I see patterns kind of naturally. So if we can visualize the market moving from like one price level, you know, like a ladder, one up, one up, one up, one up, one up. If we can see the market visualizing like that, if we can visualize it like that, and you can see it, and you know where you're wrong, then you can take the trade. If you know where you're wrong, if you know where you're going to get out for an expense, not a loss, for an expense. Listen to how I use these words, okay? My words. I can take a trade, and I will sometimes take a trade that isn't at a target, that's not out of the opening range, but you know, it'll be what I call a momentum-based trade. I'll take it, but before I take that trade, before I select it, I have to know my outs. It's something that Mickey taught all of us. I have to know, first of all, where I'm going to get out for an expense, not a loss, an expense. And then I have to know where I'm right. I have to know where I'm going to get out for a profit. If I don't know those two things, I can't take the trade. Then all I'm doing is gambling. And you know, I don't care if I've got, well, you know, I can, you know what, pick a number, pick a price. Where's the market trading? 36.80. I can get long at 36.80 quarter, and I can give you 50 reasons why it was a good trade. I can get short at 36.80 quarter, and I can give you 50 reasons why that's a good trade. I've been around long enough to where I can give you any fucking reason and explanation, and it's going to sound plausible. But I have absolutely no reason to put on a trade at 36.80 on a Sunday night. I've got no reason to. I can give you all kinds of bullshit explanations, but that's all it is bullshit. So learn what works, and when you find it, stick to it. When you find a mentor that knows what they're doing, stick to them, stay close to him or her. Ask as many questions as you possibly can and continue to, and grow. But also take time for yourself and take time for your family. If you are not protecting yourself, you guys all saw that tweet of me and my wife on the plane going to Florida. She forced me on this vacation. I mean, she didn't force me. It was our very first time away from our kids. After my father died of COVID, I had COVID. My father lived with us. I took care of him. Well, he took care of himself, but he lived with us. And all I was doing was repaying my father what he did for me when I needed it back in 2011, 12, right? After October of 11, going into the winter of 12. He let me live in his home. And so when he got a little bit older and he sold his home, I let him live with me in my home, with my family. Anyway, I had a very, very good year trading last year. I never took time off I had a very interesting, but yet very great year trading. And I never took time off to the time necessary to slow down and to, what do we say? Process it. I didn't process it. I should have. And all of this stuff started to show up in my attitude in the group, started to show up in my attitude in trading. And it's going to show up, whatever's going on in your life is going to show up on your P&L. When it shows up on your P&L, you're screwed. Now, if I can talk and talk. Look at guys, I can fucking talk about this shit forever. I love trading. There are two things I can talk about forever. I can talk about trading, and I can talk about, inner city, the programs that just the shit that goes on in Chicago and New York and the inner cities for days and hours. I can bore you guys all you want, but I can also talk about Irish and American history for hours. But I'm really trying to hit on a lot of really important points. We don't do this very often. We'll do it more often if you guys want me to. If you find it valuable, yeah, you guys can come in and sign up for a free trial. You don't have to. It's okay. I'm not selling you shit. I'm just trying to give you the benefit of my experience, and I enjoy this stuff. I truly do. Oh fuck! I lost my train of thought. So when me and Jen went on vacation, it was just the two of us, and I didn't feel well for the first 2-3 days. I still wasn't feeling good. I wasn't working out a lot. I wasn't running a lot, caught up on some sleep, caught up on some reading, and just every nap that I took while we were on vacation, every meal that I had while we were in Miami or in Fort Lauderdale, everything that we did was geared towards making me the best version of myself that I can be, which is geared towards making me the most profitable trader I can be. Everything I do is meant to avoid that one bad trade. And I mean everything. From the mindless reading that I do to the mindless YouTube videos that I watch just for a laugh or to relax, to the books that I'm reading about markets or trading or macro issues, to history, to whatever. Every dinner that I do with, that I make or eat or whatever is all geared towards making me a better trader and to protect me from that one trade that's going to start that big downward spiral. Because I'm not afraid of the markets. I'm not afraid of the markets at all. Do I look at the market? Did you look at, yeah. Well, yeah. Since when, Mark? I mean, they're going to last. Yeah, we talked about the markets a bit ago. I don't know if you're in here. Thank you, Rob. Oh, no. Oh, great question. Rob, good night, brother, and I'll see you in the morning. Sleep with the angels, kid. So, Mark, no. No, that's not wholly true. There's a disconnect for me that happens, and I'm really good about this. I've always been kind of good about this, except when I had my head, Mark, when I had my head so far up my ass that I couldn't see daylight. I wasn't. I remember being on the beach in not Saint-Tropez. I didn't trade in Saint-Tropez. Hold on one second. Yeah. Yeah, I am. I had a trader that was like, all right, dude, come on. Wrap it up. Not Saint-Tropez, but I never traded when we were in Saint-Tropez. Those are, come to the room tomorrow. Sign up for a free trial, Mark. I'll tell you all about Saint-Tropez and $60,000 tabs and P. Diddy on his yacht. God. Anyway, I remember Jen and I's first vacation with our kids when they were small, little kids. We went to Puerto Vallarta, Mexico, and I was on the beach trading hogs, and I lost $60,000 on and not even a spread, but just I slapped on a trade and 60 grand just right out the window. Oh, damn. Well, I lost that 60,000. I got to make that back, right? By the time I was done trading that day, I had lost more than $250,000 from the phone. Yeah, we're June hogs. So, that was head up ass time. Now that head has been out of ass, and I've got a gigantic head. So imagine anyway, I got a big carry head. If anybody's Irish, they'll know what a big cork or carry head is. So Mark, the disconnect for me, and I'm really good at this, even if I'm at home or I'm in my office, is if I don't have the intent to trade, then I can sit in front of the screens all day long. I can look at the market. I can sit and look. I can be talking to the traders in my group, and if I don't have the intent to trade, it's a completely different chemical reaction for me in my brain and my body. It's a completely different attitude and mindset. So I do look at the markets when I'm on vacation, at least this last time too. And when I took my kids to Ireland last year, and then, every vacation we go to, since I've had the group, I do look at the markets during the day, because I have to make sure that everybody's doing okay, right? And that I'm keeping up with what's going on. But I can maintain that separation from just being relaxed without the intent to trade. I maintain whatever kind of Zen, relaxation I'm in, or, I did yoga on the beach every morning. just this last time, this vacation, we were in Fort Lauderdale. They had we stayed at a spa, and I would do yoga on the beach every morning, and then I would come back and I would talk to the traders before the market opened. But I didn't trade all week long. And when we were done, I got up and left, right? So I don't trade, but I do look at the market. And then another thing too is, even on vacation, I do my targets. I don't know if this makes any sense to you guys or not, but I do my targets because it keeps me engaged and it keeps me focused every day. You know, I do the same thing. I do the same thing, guys, all the time. In the markets, I do the same thing 100 times out of 100, all the time. The way that I trade is not sexy. It's not cool. It's cool. It's not sexy. And you know, nobody's going to slap me on CNBC, although I've been on it before. Nobody's going to on Bloomberg. Nobody's going to slap me on CNBC to, you know, ask me anything, because I'm a blue collar trader. I do the same thing day in and day out, and doing the same thing day in and day out protects me and also gives me the ability to be open to these bigger swings in the markets. So on vacation, I don't trade. I do look at the market, and I do continue to maintain my target so that I stay in contact with the market. And I also can make sure that the traders in my group are focused the right way too. I agree there's a physiological difference for me as soon as I trade. Oh yeah, absolutely. You know, every time that we trade, even with the intent to trade, Tom, when I sit down in front of the screens and I've got the intent to trade, I've got adrenaline pumping, you know, I've got all of it. So every morning before market opens, we talk about, I say the same thing, you know, slow down, breathe deep, blah, blah, blah. My morning routine is integral to my trading. If I wake up late or I don't feel well, if I am not confident, carefree, fearless, and focused, and I don't go through my morning routine, either I don't trade or I cut my size drastically. That's when I'll start trading 4 lots. Now, I don't trade 100 lots either. I'm not a big trader. And because I'm not, well, it's all relative. To some of you guys, I'd be a huge trader. To some of you guys, I'd be a decent sized trader. I'm not a big trader, not like I was. I don't need to be. You don't need to be to make you don't need to be. You can make $100,000 in a day and trading 16 lots, as long as you know how to manage your positions correctly. Okay. Anything else? Is there any other questions that you guys have? Thank you, Leaf. I love trading, brother, and it's great to see you. I hope you're doing well. Say hi to you know, if you're still talking to Judd, tell him I love him. Thank you, Olaf. Thank you, brother. Listen, everybody, this is what I say at the end of every day, and I mean it. To all of my traders every day, I say the same thing every day. And you'll see somebody like Shelly or Jimmy Tassoni always hashtag. My mother always used to say to us when we went to sleep, there were 5 of us, now there's 3 of us left. Sleep with the angels and all the saints. So to all of you guys, sleep with the angels and all the saints in this beautiful Sunday night. In Chicago, we got 9 inches of snow today. Some more overnight. And the last thing that I love saying, some of us in our group are dealing with cancer. Some of us have heart disease. Some of us are on our last $1,000. Some of us have $1 million accounts. Some of us have, there's a couple of people with $1 billion net worths in our group. But the thing that I'm most proud of in the spirit of the PAX group is that we don't fight alone. So all of you guys, sleep with the angels and the saints. And as I say every day, none of us ever fight alone. God bless you all, and thanks for joining us tonight. It was fun. We'll do this again. Sláinte, kid. I'm a trader and I have a lot of money, but I can't do the job very well. I was thinking to teach in order to make money. I was thinking to teach in order to, but it implies to start with publicity and all that. I have questions for advice. Hey, Kate, trader, teach. Fuck, I don't know. I don't know enough about you. Trade. This is the greatest job in the world. Trading is the greatest thing in the world. My God, I used to I would drive home. This is the last thing I'll say tonight. I would drive home. I would be driving to work. I still do it. I would be driving to work in whatever car I was driving at that time, and I'd look up at a truck driver my age, and I would be, I'd be around my age, and I'd be thinking, why isn't this guy trading? Holy moly, this is the greatest job in the world. Didn't anybody tell him this is the greatest thing in the world? My worst day trading is better than my best day. And well, I've never really done anything else. I couldn't imagine doing anything else. I love this job. I love trading. I love it. So, all right, everybody. Again, sleep with all the angels and the saints, and we never fight alone.